Cheryl D'Souza. We missed you, Cheryl, for a couple of days. I hope you're feeling better.
One day, and then there was a weekend. Yes, I'm feeling much better. Actually, it's back. Good to be back in the studio.
But as you can see, I'm feeling the Monday blues. I hope the markets are not.
Yeah, a tad bit actually.
Tad bit.
Yeah, a tad bit. If you look at the benchmarks, a tad bit of Monday blues actually seeping in to the benchmark indices. But you can't blame the Indian markets. We've got the global handover, and a weak one at that. If you remember that the US markets on Friday actually tanked in trading session, and that kind of is reflected in our benchmark indices as well. But remember, the SGX Nifty was pointing at a over 270 point decline coming in for the benchmarks. For now, Nifty is down over 200 points as we speak. If you look at the screen on the Nifty index, you only have 3 Nifty stocks that are trading with the positive bias as we speak. So Axis Bank is one of them, which is among the top Nifty gainers at this juncture, followed by Power Grid as well as TCS. Remember, the TCS will be reporting its Q2 earnings later today. Let's talk about the list of losers today, and you have Tata Motors that is topping the list along with Hero MotoCorp. You have Tata Motors that's down about 4%. You have a downgrade coming in on that particular counter. So a downgrade to neutral. So on back of that, you have Tata Motors that is under pressure. Also, you had their Q2 numbers, also Q2 performance, as in the sales figures coming in. It was a tad bit below estimates as well. Hero MotoCorp down about 3%, Tata Consumer, HDFC, Hindalco, all of them actually losing in trade today. Let's take a look at what are the other sectoral indices doing in trade as we speak, and all the sectoral indices are in the negative territory. You have the FMCG index, that's the one that is the top loser on the sectoral indices front. It is down about 1.7%. You have auto index that's down about 1.3%. But otherwise, like I mentioned, all focus will definitely be on TCS because they will be reporting their Q2 numbers later today.
Right, of course. And with TCS kickstarting the Q2 earnings season, let's look at what the expectations are from the IT sector this quarter. My colleague Anisha is here to tell us all about it. Good morning, Anisha. Take it away.
Hi, thank you so much for that. Well, yes, TCS is going to kickstart the earnings season, and it's going to be a very crucial one for the IT sector because more than the number, the focus this time around is going to be on the management commentary. And the key question that the street wants to be answered is there any impact of slowdown in terms of the deal win pipeline, etc.? And will the revenue growth slow down when it comes to FY24 going forward or not? Now, in terms of the other internal, let's start with what Jefferies has to say first up. They say that revenue growth is going to be good this time around. In fact, it will be led by the likes of Infosys and Coforge because the deal execution of the earlier win deal is likely to remain strong. In fact, Infosys can also announce a buyback, and that is something that we need to watch out for in this earnings season. Tech Mahindra, on the other hand, might report a bit softish growth when it comes to the top line. There will be constant currency impact throughout all companies, so that is why US dollar growth will be a lot less than the rupee revenue growth. And in terms of margin, there is going to be a sequential improvement because in Q1 we saw that a large part of the margins was eaten on account of the wage hikes, which is not expected this time around. So we are working with some sort of margin expansion, and Coforge and TCS are likely to really lead that. In terms of guidance change, while we're not expecting any guidance change for FY23, but commentary on FY24 will really be important because in terms of the valuation, we have seen that the stocks have declined anywhere between 30 to 40% this year, but they're still trading at a premium versus the long-term average. So the risk reward is something which is still a bit unfavorable, and the analysts believe there is a bit of time correction that can happen. As it is, the sector is facing a lot of headwinds because attrition is something which continues to be sticky. The expectation was that we have seen the worst of it in Q1 itself. But now there seems to be a bit of change in commentary that attrition will continue to be high in Q2 as well. And there is going to be some definite slowdown when it comes to hiring trends. We have all seen those headlines coming in for the IT sector, whether it's about delay of onboarding or revocation of offers. So hiring is something that will also be important because that is your lead indicator of what growth expectations really are. So very crucial for the IT sector, given the kind of correction that we have seen across all the companies. Back to you guys.
Thank you so much for that, Anisha, for putting into context what should we watch out for the IT sector as a whole when they report their Q2 earnings. You have TCS that's kickstarting the earnings today for the IT pack, and as in general the entire Q2 earnings as well. So let's bring on board our guests for today. We have Kunal Bothra as well as Mr. G. Chokalingam joining us. Very good morning to you, Kunal, as well as Mr. Chokalingam. Thank you so much for joining us on ET Now, especially on Buy Now, Sell Now. And Mr. Chokalingam, I'll come first to you. You had Anisha that outlined the various factors that one need to watch out for when the tech sector actually reports its Q2 earnings. What, according to you, or which stocks, according to you, stand to benefit in the quarter gone by?
In fact, across the board, there could be 15% revenue growth for top tier companies like Infosys, TCS, thanks to rupee depreciation. But these top companies are likely to post single-digit profit growth on year-on-year basis, whereas the second tier companies are likely to do much better than the top tier one companies like Persistent, Emphasis. Those are the companies might do better. Because their margins are much lower than the top tier one companies. So therefore, there seems to be, a lot of vendors preferring to shift or give more business to tier two companies. And therefore, tier two companies are likely to do much better in September quarter. So therefore, I believe that the tier two companies most probably could outperform tier one companies post September results. However, across all stocks in the IT space, I believe by mid-2023, they should do extremely well. Rupee has fallen and never rupee, whenever it depreciates, never it restores back its value. And secondly, unlike in the goods exports, in India, IT service exports, India doesn't have a severe competition. So therefore, they would be able to benefit out of this depreciation in the medium to long term. So across the board, I am extremely bullish, including stocks like Wipro, Cyient, and Gensar. If you have a one-year time frame, I believe that this is the ideal time to start building the portfolio of IT stocks right from the this September. Once the September results come in, one should start building the portfolio. I am very confident that this is the ideal time to make a lot of money in IT stocks in the next 1 year time frame.
Right. Thank you for that perspective, Mr. Chokalingam. Good morning, Kunal. Adiraj here. Coming to you now. As we said that TCS kickstarts the earnings season for the IT pack. What's your perspective?
Good morning, Adiraj. Good morning, everyone. So, on IT stocks, I believe that the prices have indicated a double bottom formation on the charts. As you can see that the June lows which the IT index had hit, that was just about the 25,000, 25,600 levels, and we've double tested those important support. What has happened is that on the second test of the major support, the indicators so far have shown signs of bullishness. That generally indicates that maybe there is a possibility that if this major support holds on for the IT stocks or the IT index, we could expect a reasonable bounce. So any kind of a bullish view could be intact for the IT names till the time the index trades above this major support level, which is just about the 26,000 mark on the Nifty IT index.
All right, so that's the view coming in from both of our experts on the IT sector in particular, and from Kunal, it's a view on the IT index. But let's talk about an IPO that has opened, and that is Attrition Technologies. The IPO has opened and the price band is around 75 to 85 rupees per share. We have the management of Attrition Technologies joining us. We have Neha Singh, who's the chairperson and managing director at Attrition Technologies, and Abhishek Goyal, who's a vice chairman and executive director at the company. A very good morning to both of you all. Thank you so much for joining us on ET now. And let's talk about the attrition that we are seeing, considering the high attrition rate in the IT-enabled sector and already double digital attrition that we are seeing level of Attrition. What are the company's efforts to bring down the employee costs in particular?
So if you look at last quarter, our attrition was 13.8%. Being a tech company, I think that is one of the challenges that, like most other companies, we also take a lot of measures to do that. So one of the things is reasons is that we have a large pool of freshers or people who are joining 1 or 2 years, wherein you see high attrition. But on the other hand, you also have a good program for appraisal. So all the good performers, you are able to sort of progress them through the company. And also we have an ESOP pool, which is about 11% of the total cap table, which covers our senior management. So if you look at our CXOs and our senior management, actually all our CXOs have been with the company for more than 5 years.
Right, a very good morning, Abhishek and Neha. This is Adira joining in. Another important question is that the company's current competitors include the free online and offline sources of information on companies and businesses, including government record company websites and online database. Now, how do you plan to navigate through all this stuff and the stiff competition?
So globally, if you look at even in the data for public market investors, there is a lot of free sources available, which the companies actually give out. But hence, the companies which have sold to public market investors are large cash-rich companies because the investors are taking business-critical decisions. So similarly, in the private market also, we see there is a huge market for building enterprise-grade platforms for selling to private market investors. In our case, for instance, globally, there are only about 5 or 6 players which exist. In a short span of 9 years, we have become among the top 5 players globally in the private market data space.
Right. Let's talk about the growth ahead then. And what's your outlook for the growth for next year for Traxon?
So if you look at last year, we ended at 65 crores of total revenue, which includes 63.5 crores of revenue from operations. This is a 44% increase over the previous financial year. Even if you look at our last 3 years, we have grown at 30% CAGR, right? 70% of our revenue is international, primarily USD. And US is one of the largest, accounting for 27% of the revenues, right? So we hope to continue to build on the trajectory of the top line, as well as interesting profitability profile of, our EBITDA margins have continued to expand. So we continue to sort of build on the top line as well as on the expanding EBITDA margins.
Right. Neha, tell me this. Being a SaaS company, you have a global operations, of course. You have significantly cost advantages. Tell us more about these advantages and how have you leveraged them to expand your business overseas?
So that's thanks for the question. That's a very interesting question. So 70% of our revenue is international. We today work with private market investors and corporates across 50 different countries. So we do enjoy the cost arbitrage of making in India and selling globally. If you look at our cost base, our entire team is actually based out of India. So this gives us a fairly large and a long-lasting cost arbitrage. Right? And we have been able to sort of leverage that by investing more in product technology and also having sort of a good bottom line characteristics because of this dollar to rupee conversion.
Right, Neha. Let's talk about the price band of the company. And at the higher price band, you're actually demanding an EV to sales multiple of around 12.3 times. Does it actually not seem a bit too stretched for a loss-making operation?
So I'll just clarify also on the second point, which is in terms of our profitability. So this, if you look at more recently, we have turned profitable. In addition to that, the expansion has been fairly linear. So if you look at our EBITDA, that has expanded in a consistent manner on a year-on-year basis. Last year, for instance, 78% of our incremental revenue directly went into the bottom line. So that's one on the profitability. Also, the company has been generating free cash flow. So if you look at last year, excluding the IPO expense, which is reimbursable to the company generated a free cash flow of nearly 5 crores, right? Which in the first quarter of this year has increased to a run rate of nearly 5.8 crores, right? Coming to the next question of valuation. So I think valuation, we actually worked with some of the anchor investors initially, which is what we closed on Friday of last week to arrive at that.
Right. Many thanks, Neha and Abhishek, for joining us on the broadcast. But don't go anywhere as we slip into a short break. We'll be right back with the queries and the rapid fire segment.
warm welcome. You're watching.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
If the normalization in the world will happen, demand which in a sense got destroyed will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
A long-haul FII who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now. The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You could remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%, but we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader.
It's the daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted
Welcome back. You're watching Buy Now, Sell Now on ET Now, and time to just take a look at what should a retail investor actually do given the fact that there is volatility in the market, and it is time that you have to go ahead and protect your wealth. Mr. Chokalingam, so this question I'm going to pose to you: what should retail investors actually do to protect their wealth, given the fact the market is extremely volatile? We are moving on a day-to-day basis in the direction that the global cues are headed.
Yeah, certainly it's a tough time. There is no doubt about it. So still, I would say that the retail investor should not lose the heart and move away from the stock market. Use this time to make investments for 1 to 3 years, because there are a lot of quality stocks also got beaten down and available at a very appealing valuation. So the best strategy to survive and also to ensure that one doesn't lose wealth easily or it doesn't get eroded substantially, the best strategy would be to focus on some of the defensive stocks within the small and mid-cap space. Like, for example, you have a Poway Medical. It has been a consistently growing hospital business and cheaply valued as compared to many other hospital sectors. Its enterprise value per bed is about 1 crore rupees as compared to 3 to 8 crore for other hospitals. Or in the large cap space, one can look at stocks like Oracle Financial Services. I am so surprised that this MNC, around $40 billion company's subsidiary in India, is available around 6% dividend yield and 10 to 11 PE. And if you recall the history, whenever the stock got beaten down so badly, 30-40%, it always rewarded the investors back again in the next 1 to 2 years. So this kind of strategy where you have a strong balance sheet, defensive business, cheap valuation, time-tested businesses, and listed in the market for more than 10-20 years, these are the companies the retail investor should focus and invest, and definitely one can make a lot of wealth. Even if there is a risk, the erosion may not be more than 5-10% in the next 6 months. But ultimately, let us not forget the fact that India still remains as the fastest growing economy. Our problem is only with oil, not the rate hike. Please remember that the current deflationary condition across the world or the growth slowdown is an endogenous one. It is system driven. It is the policymaker who have decided to bring down the economy because of inflation. Same policymakers will be compelled to reverse all this, and the economies will come back to normal growth, maybe 6 months or 1 year. So therefore, don't lose the heart and keep investing in quality stocks. You are certain to make a lot of wealth the way the Indian market has created in the last 30-40 years. So stay invested in such stocks.
Stay invested in quality names is the word coming in from Mr. Chokalingam. But let's kickstart with the query segment then, and all of those who've been tuning in all this while know what to do. But those who are tuning in for the first time, we are live on YouTube, Facebook, as well as Twitter. This is the show where we take all of your stock-related queries. We are also, you can write into us also on the WhatsApp number that's flashing on the top of your screen. Do mention your name, the stock that you're looking to invest in, and if you've already invested in the stock, then do mention the quantity and also the buy price of the counter and the time horizon that you're looking for the particular investment. So let me kickstart with the query segment, with the first query coming in from Nino. And he's saying that he has 200 shares of tin plate at 300 rupees per share. He wants to know what should he do after considering the amalgamation, the upcoming amalgamation with Tata Steel. What's your take on this one, Mr. Chokalingam? Tin plate, 200 shares at 300 rupees per share.
If he's not losing money, he can sell because I am terribly negative on the steel sector for another 6 months to 9 months.
Right, Mr. Chokalingam, this one's for you. Rahul's writing to us from Delhi. He's asking whether he should sell IGL at a cost price of 436 and buy Varroc Engineering in a long-term perspective.
IGL, right. He can, he can do that because the auto sector is likely to be a growth mode. We have already seen the uptick in many segments, though not all the segments have done well. So he can definitely shift from IGL to Varroc Engineering.
This comes from Manish Raju. This one is for you, Kunal. And he wants to know about solar industry, if it's a good buy at current market price for a period of about 6 months.
So you can look to buy at current levels, but then have an averaging strategy or buying on dip strategy because the stock seems to be getting into a bit of an overbought territory. So you may look to buy at current levels, but then the next dip which you should be looking to buy should be at least 10% lower from current levels. That should be just around that 3,600, 550 mark for solar industry. So it seems to be a good chart. The momentum is very strong, but then buy on dips is what I would recommend.
Right. Kunal Padmanabha has written to us from Dubai. He's saying he has Sangam India Limited and NIIT Limited. He bought both of them at a quantity of 3,000 and bought them 10 years ago. He's asking for future prospects.
So I think NIIT Limited is attractive. I think it's a very interesting chart. It has a very good history for itself as well in terms of price momentum. I would suggest that as a hold even from current levels. Yes, in the last 1 year, the stock has halved from 600 levels to 300, 320 where it's currently trading right now. Sangam Industries, on the other hand, I don't see any major prospects coming on the charts, at least over the very near term. For last 1 year, the stock has been more sideways from 400 to 270. So you may look to buy, but then I think the averaging opportunity which you can do should be closer to 250 levels for Sangam.
Okay, this next one is coming from Neha Toteja, and she wants to raise cash position by selling some of the stocks. She's holding Polymed at a price of around 831 rupees per share. What sort of targets can she look at for the near short term, and should she look to book profits now or wait? Kunal, by any chance, do you track Polymed?
So I do track that stock. It's a bit liquid, so that's the first important criteria which you have to look out for. On the charts and on the last, I think 5 or 6 days, Polymed has risen up sharply from 850 levels to 1000. So on the short-term charts, it's getting slightly into that overbought territory. So maybe if you are looking at it from a very, very short-term play, you may look to book out at current levels. Maybe look to buy back if the stock corrects by, say, 50 rupees or so, closer to 970, 960 mark. That could be a good strategy. If you're not looking at that kind of a short-term time frame, then you may look to hold on to the stock from a near-term play, because I believe post a marginal dip, once the stock gathers back its momentum, it can cross back about levels of even 1100 as well.
Right, Kunal, Mr. Jokulingam, please stay with us as we slip into a short break, but don't go anywhere. We continue with the query segment after the break and also get you the rapid fire.
आग को फैलने से रोकना.
Trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in 80 now.
Start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Is it overvaluation case?
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET now. Break free.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is like, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
This is clearly one of the biggest deals.
Here, ET now have been getting you bit by bit.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply.
The Nifty bank index is
buying
down.
momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
See, Nikunj, you are a very seasoned market observer and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 50.
Welcome back to ET Now's Buy Now Sell Now. Mr. Chokalingam, this one's specially for you. Aarti is writing and she wants your advice on two stable mid-cap stocks, but she said that she doesn't understand the names, so she please wants you to advise her two stable mid-cap stocks, basically.
Yeah. I would strongly recommend GNFC, Gujarat Narmada Fertilizer Corporation. It's trading at around 5-6 PE. This company makes about 15 chemicals, and across all the sectors are using GNFC chemicals. And most interestingly, most of the plants are operating above 100% capacity utilization and a strong balance sheet, net cash company. More than 3,000 crore is the cash the company holds. I firmly believe that in 1 year or so, the valuation can be re-rated for this. The second stock, I've been extremely bullish for a very long term. In between, the corona came and spoiled its opportunity, which I personally hold also, is Nesco. I still believe that Nesco is the next generation stock. It's holding on to 65 to 70 acres of land in Gurugram near highway. And in front of the property, the new metro train is likely to be commissioned within a month or so. And, Mumbai is a place where the land is scarce and it keeps going up one way. And the company is a strong balance sheet, a lot of cash on the books. The most important thing I like about the management is that in the last 10 years, they have done lots of capital expenditures all through internal accruals. Despite all that investments, they still hold little above 700 crore free cash, and they have planned a lot of further expansions. Once the train is commissioned, metro train is commissioned, just in front of its property, I believe the stock can get re-rated. And in the long term, the expansions will create a lot of opportunity for wealth creation in this stock. So therefore, I would strongly recommend Nesco and GNFC. Again, I am personally holding, my economics also holds shares of Nesco.
Right. Actually, talking about the metro project, we had the management of JK Infra today, Mr. Chokalingam, and he did mention by December or so, we should expect these lines to be commissioned. So yes, for all of those who are close to that area, definitely a big plus point coming in. But let's move on and let's take this next query. This one's from Tripta Aluwalia, and she wants a view on Suprajit Industries. Mr. Chokalingam. What she's saying that she's already has investment in FIAM Industries at a price of around 1,660 and Vinati Organics at a price of around 2,170. I believe that she's looking at Suprajit Industries by selling both of these counters because her question is a bit open-ended, so I think that's what she wants to know. So do you think that Suprajit Industries is the best bet to take by exiting these two counters?
Little difficult because Vinati Organics also on its own stand out to be a great company in terms of growth and also creating wealth for the shareholder. But certainly, if she wants to sell, she can consider Aarti Industry and then buy Suprajit Engineering. It's an excellent management. The stock also corrected, and auto sector is set for further growth in the next 1 to 2 years. So therefore, Suprajit Engineering should be benefited by that anticipated growth. So I would suggest sell Aarti and buy Suprajit Engineering.
Mr. Chokalingam, coming to you now, Sadashiv Kamath is writing to us from Bengaluru. He's purchased Bandhan Bank 1,000 shares at 266 for a long term of 3 years. He's asking what he should do next.
He can hold on, but I believe that these kind of, the banks which are converted from small finance still might face some difficulty because the competition has increased across from different layers of financial services industry. So in case it improves 10-15%, he can diversify by partly selling this and buying large banks like HDFC Bank or Kotak Bank.
Okay. This one is from Leon Kunal, and this one is for you. He's saying Tata Motors Futures, 1,500 shares at 420 rupees per share. What's the prospect?
See, I think the stock has been in some news flow today, if I'm not wrong. That's one of the reasons why it's been under some, selling pressure right from the opening itself. Generally, these kind of selling pressures, they last for, a couple of days. And if the market bounces back, then we see a meaningful bounce coming into the stock. So if you've bought at higher levels of 420 odd, I would suggest that, good time to try and hedge it with some sort of a put option, or much better would be to try and buy an out of the money call option or closer to your strike price or your entry price in futures. That could be a good trade for the next couple of days. And once the stock bounces back, by that I mean if it crosses the 400, 405 levels, say over the next 1 or 2 days after the period of correction, that could be a point where you can look to maybe average further on the futures.
Right. Kunal, coming to you. Vivek Thakur is writing to us from Delhi. He's holding Tanla Platforms, 100 shares at a price of 822. What should he do? Buy, sell, or hold?
I think you should hold.
Okay, this one is from Ramachandran, and he wants to know whether he can add Sona BLS or BLW at the current price. He wants a view for the next 3 to 4 years, and he also wants to know, Mr. Chokalingam, will the disruption in Europe as well as US markets impact the performance of this company? Correct me if I'm wrong. As far as I know, you are pretty bullish on Sona Comstar, isn't it?
I mean, it's a great company. I mean, there is no doubt. If you look at the growth in the last 2-3 years, it has done very well. But there are two concerns right now. As you rightly mentioned, the European economy is going through a tough time, and even a recession might happen there and it can extend for 3 to 4 quarters as well. And secondly, the company doesn't have valuation comfort also. It's already priced in solid growth for the next 1 to 3 years. And I have a doubt whether next 1 year that kind of growth can happen. So therefore, I am not in favor of the stock.
Right. Kunal is writing to us, Kunal, and he's asked for this question. He has asked a good buy for Nifty bank call options.
So I think if you are looking at it from the current expiry per view, then I would suggest buying maybe a 39,200, 39,300 call option for the bank Nifty. I believe that that's where you could be looking at the bank index heading towards, assuming that the global markets also get into a bounce. And if you're looking at it from the monthly series, and if you're looking at it from the buying per view for the coming month, monthly expiry, then you can be looking out for 39,500 as a broader expiry or a strike for the call option.
All right, the next one that I have is coming in from, just a second. Okay, this one's from Technical Surana ji. He wants to know about ITC, Kunal. He's bought 100 shares at a price of around 262 rupees per share. He wants to know whether he should hold book profit. He's saying that he can hold on for the longer term. What's your take? Do you think ITC ka din aa chuka hai? You can keep it for the long term now?
Yeah, I think you should keep it for long term. I think you've bought at a decent price. The stock has done reasonably well for itself in the last 9-10 months of this calendar year. And so far, I believe that it's been one of the few large cap names, Nifty 50 stocks, which has managed to absorb a lot of the volatility, the news flow in the markets, and still managed to outperform or get into a strong performance zone. So why be in a hurry just because the stock had been an underperformer in the last 4-5 years? That doesn't mean that the stock would continue to remain into an underperforming zone. Looking at the prospects over the last 8 to 9 months, I believe that the prospects over the near to medium term for ITC looks very attractive. So my suggestion would be to hold.
Right. Kunal, Professor Thomas V. George is writing to us from Kochi. He's asking between Bata, Campus Active and Metro Brands, out of these three footwear stocks, which is the best?
Metro Brands seems to be an interesting play because I think that stock has done quite well for itself. Bata India apparently has been an underperformer. Yes, the stock has been one of the few names from the F&O space as well. But surprising because that stock has been an underperformer as compared to both of these stocks. Campus Metro Brands have moved more or less hand to hand. But then I think Metro Brands has a lesser degree of volatility as compared to Campus Active Footwear. So I think I would go with Metro Brands.
Okay, this next one that I have is coming from Jayakrishnan, Mr. Chokalingam, and Jayakrishnan wants to know, makes sense to enter Devyani International and Century Ply at current levels for the medium term?
Sorry, this particular stock, I somehow missed it. I haven't analyzed.
Devyani International?
Yeah, I haven't analyzed this stock in the recent
time. Okay, and what about Century Ply then?
Century Ply one can hold in the short to medium term. Recent correction also augurs well, and also the real estate sector is slowly looking up now, so therefore one can hold on to it.
Right. Mr. Chokalingam, coming to you, Mr. Sarvanan is writing to us. He's bought IRCTC at 950 at 150 quantities. He's asking whether he should hold or exit right now.
He need not book losses, he can hold on to it. The things have improved, normalcy have come, and railway travel also increased, and also the very low retail float. So that tactically also there is a possibility of upswing in the stock. So once he gets his principal back, he can sell and move on to some other stocks.
Well, Harish is writing to us from Bangalore. He wants to know whether it's right time to buy Tata Motors and Radico Khaitan for the short term, and how are the charts looking for both of these counters?
So Tata Motors, we discussed earlier that I think just about that 405 is where you should look to buy. So when the stock is into a sharp corrective mode, you don't need to buy it at an immediate point. You need to wait out for the breakout or a reversal to happen on the upside. That could be a trigger point. So you can keep it in your radar, but I think about the 405 levels is where I would suggest to buy Tata Motors. And for Radico as well, I think it's an interesting chart. It's been one of the best performers. In fact, we've done this comparison, end of 2021, which were the best performing, the liquor names from the 2020 lows, and I think Radico, Global Spirits, they were the two top performers from the entire pack. Even GM Breweries, I think, had done reasonably well. So I think these three are very good stocks in terms of price performance from the liquor space. So if you can probably try and diversify into these three names, or maybe 2 out of 3 names, that could be a good diversification for the entire sector.
All right. Then on that note, we'll actually slip into a break in this edition of Buy Now Sell Now. But hang in there, Mr. Chokalingam as well as Kunal, because when we come back, we will be back with viewers' queries once again. And viewers, don't go anywhere. Stay tuned.
आपको
15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen,
A long-haul FII who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now. The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you will be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%, but we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader.
It's the daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in ET Now.
Markets are trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and as you can see on the bottom of the screen, mild recovery coming into the markets, 100 points uptick from the day's lowest point. For the Nifty, take a look at some of the IT names as well and what they are doing in trade today. The likes of TCS, remember that TCS will be reporting its Q2 earnings later today, post the market hours at the day's highest point, 1.3% uptick coming in. For TCS, even the Nifty IT index has seen a very smart recovery from the day's lowest point, uptick of about 1.7% from the day's low, and as you can see, TCS is trading higher by about 3% from the day's lowest point. But let's continue with the query segment then. And the next query that I have is coming in from Kaustubh G. And he wants to know whether he should add Prince Pipes at current market price. Kunal, what's the take on this one? How is this stock looking on the charts?
Well, I think it looks attractive. In fact, Prince Pipes is also one of the few stocks which is generally liked by a lot of institutional players. I would believe that at 580 approximately, it's a stock which you can look to buy. Your time horizon is the key over here. So if you are in from a longer term kind of a time horizon, then buying at current levels makes a lot of sense.
Right, Kunal, coming to you now. Robin Chatterjee is writing to us from Barrackpore. He's bought Titan, 200 shares of Titan as 2,721. He's asking for a short-term perspective. What should he do?
So you can look to hold on to the stock. The only concern with the very short-term charts is the Friday's move had brought the indicators back into an overbought territory. So possibly for the next couple of days, the stock may remain into a bit of a consolidation. So if you're looking to average, then I think at 2,680 on the spot levels could be a good point where you can look to average.
Okay, Natarajan Ramesh has written to us, Mr. Chokalingam, asking about IG Petro, 200 shares purchased at 600 rupees per share. He's saying that the price of this particular counter is steadily dropping. Is there any fundamental issue in this one? What should he do with his holding already in IG Petro?
The problem is there are 2-3 companies engaged in phthalic anhydride. IG Petro also makes phthalic anhydride, where the input prices have gone up substantially in line with oil prices. So which is impacting the margin, and therefore September results could be a little bad. If he's losing a lot of money, then he can hold on to it, because historically the phthalic anhydride business always has come back to normal, and it has always rewarded in terms of substantial recovery in the stock prices. So if he's losing a lot of money, he can continue to hold IG Petro.
Right. Aarti is writing to us from Delhi. She's holding Angel One, and she's asking for a long-term perspective. She's not given us the numbers. Mr. Chokalingam, this is for you.
Angel Broking?
Yes.
Okay, sorry. I think, with the kind of regulatory changes and all, it's going to be a little tough to maintain the current margins. So therefore, I am not in favor of buying any broking stocks now.
All right, with that, let's kickstart with the rapid fire then. And first one coming your way, Kunal. Anuradha has 10,000 shares of Trident purchased at 6.8 rupees per share. What should she do with this one? Book profits.
I think you should continue to hold.
Right, Aarti is writing to us from Delhi. She's asking about India Bulls Housing Finance, bought 100 shares at the price of 215. What should she do, average or at current levels, Kunal?
I think you should look to exit.
Okay, this next one is coming in from Nagarajan R. Wants to know whether we should invest in Bajaj Holding at the current levels for the long term, Mr. Chokalingam?
I won't advise now. Valuation discount is come down a lot.
Right, Mr. Chokalingam, Shailesh is writing to us from Delhi, holding 15 shares of Polycab at 2,224. Can he add more shares at the current price?
On decline, probably you can, yes, add more shares.
Okay, Kunal, this one is coming from Anurag. Cochin Shipyard, 100 shares purchased at 434 rupees per share. What should he do with this counter?
Well, I think you should look to hold on. My intraday targets for Cochin Shipyard or position targets is around 570.
Right, Kunal, Sandeep is writing to us from Tripura. He's holding Birla Soft and he's asking what he should do for in the next 6 months. Should he average or exit? He bought them at 430 per share.
I think you should look to average.
Okay, this one is from Santosh and he wants to know whether it makes sense to buy afresh in Avenue Supermart with a 1-year horizon, Kunal.
Well, yes, you can look to buy.
Mr. Chokalingam, Akriti is writing to us from Chandigarh. She's asking about, stating, will Hindalco raise in the future?
Another 6 to 9 months at least, it will continue to face a problem.
Right.
So I would advise buying Hindalco now.
Okay, Satya wants to know about Tata Consumer, bought at 810 rupees per share. Kunal, what's the stop loss for the medium term and should average at current market price?
Well, yes, you can look to average at closer to 740 mark for Tata Consumers.
Right. Kunal, Rishabh is writing to us from Delhi. He's holding shares of Hindalco again. He's asking whether he should do in a short-term perspective.
Well, yes, you should look to hold. I think the metal stocks are just about getting into the groove. I am bullish on metal names from a short-term view.
Right.
All right, and with that, we come to the end of the rapid fire as well as query segment. Thank you so much, Mr. Chokalingam as well as Kunal, for joining us on the show, giving us a take on the IT pack. as well as resolving our viewer queries. And viewers, we are totally out of time in this edition of Buy Now, Sell Now. It's a goodbye from Adaraj, myself, and the team that put the show together. We'll be back tomorrow with all of your queries, so don't worry and don't be disheartened if you've not taken it today. But for now, it's a goodbye from both of us.
आग को फैलने से रोकना।
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is like, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
Although difficult to predict, return will be more than 10 lakh.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify